Hello, everyone. Welcome to Cardinal Tokens Newsflash. Bitcoin dips to 109.2K, despite Fed's rate cut announcement. In an unexpected turn of events, Bitcoin's price has dropped to $109,200 following the Federal Reserve's recent decision to implement a 0.25% interest rate cut and officially conclude its quantitative easing program. This decline raises eyebrows among traders who had anticipated that such monetary easing would bolster the cryptocurrency's value. The Fed's announcement made on October 29, 2025 was initially received with optimism across various financial markets. However, Bitcoin's dip suggests a complex interplay between investor sentiment and macroeconomic factors. Despite the Fed's commitment to potentially lower rates in the future, the immediate market reaction has been a stark contrast to expectations. Analysts are now grappling with the implications of this price movement. Some speculate that the market may be reacting to broader economic uncertainties or profit-taking among investors who had previously seen substantial gains. The cryptocurrency market is notoriously volatile, and such fluctuations often reflect the intricate dynamics of investor psychology rather than solely economic indicators. As traders digest these developments, the significance of the Fed's actions on Bitcoin and the broader cryptocurrency ecosystem remains a critical topic of discussion. The juxtaposition of a rate cut with a falling Bitcoin price underscores the challenges that digital assets face in navigating traditional financial landscapes. As always, keeping an eye on macroeconomic trends will be essential for those involved in the crypto space. Grayscale launches staking-enabled Solana ETF on NYSE Arca. In a significant development for the cryptocurrency landscape, Grayscale Investments has officially launched its Solana Exchange Traded Fund, ETF, on NYSE Arca, marking a pivotal moment for institutional investment in the blockchain space. The ETF, which enables staking, has debuted with an impressive $103 million in seed capital, positioning Grayscale as the second manager of a Solana Exchange Traded product, ETP, in the United States. This move follows closely on the heels of Bitwise, which has already entered the Solana ETF market. The introduction of staking capabilities reflects a growing trend among financial institutions to leverage the benefits of blockchain technology, particularly in terms of yield generation for investors. Staking, which allows participants to earn rewards by locking up their assets, has become a focal point for many in the crypto sphere, enhancing the appeal of digital assets as viable investment vehicles. Grayscale's entry into the Solana ETF space underscores the increasing institutional interest in alternative cryptocurrencies, particularly those that exhibit robust use cases and community support. As regulatory frameworks continue to evolve, products like Grayscale's Solana ETF may pave the way for broader acceptance and integration of cryptocurrencies within traditional financial markets. The launch not only highlights Grayscale's commitment to expanding its product offerings, but also signals a competitive landscape for Solana-focused investment vehicles. As the market matures, the implications of such products could redefine how investors engage with the burgeoning world of digital assets. Binance Wallet enhances transparency with Bubble Maps partnership. In a significant move aimed at bolstering transparency in the cryptocurrency space, Binance Wallet has announced a partnership with Bubble Maps, set to enhance the platform's capabilities in monitoring token distribution and insider trading activities. This collaboration, revealed on October 29, 2025, integrates Bubble Maps' advanced blockchain data tools into Binance's Web3 wallet. The integration is designed to provide users with detailed insights into the distribution of tokens, thereby empowering them to make more informed decisions. By leveraging Bubble Maps' innovative data visualization techniques, Binance Wallet users can better identify potential insider trading patterns, a concern that has increasingly plagued the crypto market. Germany's AfD advocates for Bitcoin as a strategic asset amid regulatory concerns. In a significant development within the European cryptocurrency landscape, Germany's Alternative for Germany AfD party has urged the federal government to recognize Bitcoin as a strategic asset. This call comes in light of the European Union's Markets in Crypto Assets (MICA) framework, which the AfD perceives as a hindrance to the broader adoption of Bitcoin and other cryptocurrencies. The AfD, currently the main opposition party in Germany, argues that the existing regulatory environment under MICA stifles innovation and limits the potential benefits of cryptocurrency technologies. The party's stance reflects a growing sentiment among certain political factions that advocate for a more favorable regulatory approach to digital assets, particularly in a time when Bitcoin continues to gain traction globally. Details regarding specific proposals or amendments to current legislation were not disclosed, but the AFD's position highlights a critical dialogue on the future of cryptocurrency regulation in Germany. The party's push for reform underscores the ongoing tension between traditional regulatory frameworks and the rapidly evolving digital asset landscape. As the debate unfolds, the implications of the AFD's advocacy could resonate beyond Germany, influencing broader discussions on cryptocurrency regulation within the European Union. The outcome of this political maneuvering may ultimately shape the trajectory of Bitcoin adoption and the strategic positioning of cryptocurrencies in the European market. XRP price charts signal potential rally toward $3. In an intriguing development for altcoin enthusiasts, multiple technical indicators are pointing toward a potential rally for XRP, with forecasts suggesting a price surge toward the 3 mark in the coming days. This bullish sentiment comes as the balance of XRP held on exchanges has reached 5-year lows, a trend that often precedes upward price movements. Analysts are closely monitoring several key price charts that illustrate this momentum shift. The convergence of these technical indicators suggests that the market sentiment surrounding XRP is shifting positively, potentially setting the stage for a significant rally. As XRP continues to navigate the complexities of the cryptocurrency landscape, the decreasing supply on exchanges may indicate an increasing demand among investors. This scenario could further amplify the upward pressure on XRP's price, making it a focal point for traders looking to capitalize on the anticipated movement. The implications of this potential rally are significant, not only for XRP holders but also for the broader altcoin market. Should these predictions materialize, it could signal a renewed interest in altcoins, reflecting a shift in market dynamics as investors seek opportunities beyond Bitcoin and Ethereum. As we approach the end of October, all eyes will be on XRP to see if these forecasts hold true and whether the altcoin can indeed breach the $3 threshold. Brazilian solar firm Thopen eyes Bitcoin mining to harness surplus power. In a strategic move to optimize its renewable energy capabilities, Brazilian solar energy company Thopen is considering the integration of Bitcoin mining into its operations. This initiative aims to monetize the surplus power generated by its solar facilities, particularly addressing the issue of curtailment losses that often accompany renewable energy production. As the demand for sustainable energy solutions grows, Thopen's exploration of Bitcoin mining represents a significant step toward maximizing the efficiency of its energy output. By converting excess electricity into cryptocurrency, the company seeks to create a new revenue stream while contributing to the broader adoption of renewable energy sources in the crypto space. Details regarding the specific plans and timeline for Thopen's potential foray into Bitcoin mining have not been disclosed. However, the move aligns with a growing trend among energy firms looking to leverage blockchain technology to enhance their operational models. The significance of this development cannot be understated, as it highlights the intersection of renewable energy and cryptocurrency, paving the way for innovative solutions to energy management challenges. As Thopen continues to explore this avenue, it may set a precedent for other companies in the sector, reinforcing the viability of Bitcoin mining as a complementary strategy to renewable energy production. Saylor predicts Bitcoin could reach $150K by 2025 amid positive regulatory climate. In a bold forecast, Michael Saylor, co-founder of Strategy, has asserted that Bitcoin could potentially surge to $150,000 by the end of 2025. This optimistic prediction comes on the heels of what Saylor describes as positive regulatory developments in the United States over the past year, which he believes signal a promising future for the digital asset industry. During a recent discussion, Saylor emphasized that the evolving regulatory landscape is fostering a more conducive environment for cryptocurrencies. He noted that these advancements are not only beneficial for Bitcoin, but could also positively impact the broader digital asset market. Saylor's insights reflect a growing sentiment among industry leaders that regulatory clarity is crucial for cryptocurrency adoption and investment. As Bitcoin continues to navigate the complexities of market dynamics and regulatory scrutiny, Saylor's prediction adds to the ongoing dialogue about the cryptocurrency's long-term viability and potential for growth. The prospect of reaching $150,000 by 2025, while ambitious, underscores the increasing confidence among key players in the fintech space. As the digital asset landscape evolves, Saylor's remarks serve as a reminder of the intertwined relationship between regulatory developments and market performance. Investors and enthusiasts alike will be closely monitoring these changes as they unfold, shaping the future trajectory of Bitcoin and the entire cryptocurrency ecosystem.